Hello everyone, welcome to Healthformative. Healthformative is a platform that promotes health and wellness. It's to inform you of your rights and responsibility as a patient and consumer, while also providing the tools and resources that you need and encouraging you to live a healthy and well lifestyle. So today's episode, we are going to talk about claims. So I know it's really confusing when you get that bill in the mail from your provider's office and you just don't even understand, especially, and the most common one is after a stay in the hospital, because a lot of people don't know that you get a bill from, you always get multiple bills when you stay in the hospital. You get a bill from the facility itself, and that includes the bed that you stayed in, the TV that was in there, the machines, the bathroom, medication that they gave you, and again, that depends on hospital. Anything that's related to that facility, you'll get a bill for that. And a separate bill for, let's say for example you had surgery, you'll get a bill from the surgeon. You'll get a bill from the radiologist who viewed the x-ray or the MRI or the CT scan. You'll get a bill from maybe the nurse practitioner. You'll get a bill from one involved in your surgery. You're going to get a bill from, and that includes, because a lot of people say, well, I don't even remember seeing this doctor. A lot of times you don't see the radiologist, but they read your x-ray, so you're going to get a bill from them. And that's something that a lot of people don't realize. Like, they read your x-ray, so they're going to send you a bill, and you will get separate bills. It will not be all together with the hospital bill, because sometimes those doctors aren't contracted with the hospital, or they don't work for the hospital. They bring them in. So that is a common one when it comes to claims, is the hospital ones, and knowing that you're going to always get separate bills. If they read the report, if they read the x-ray, if they saw you in the hospital, you're going to get a separate bill from them. Always call and check with your insurance to see if something is covered before you go through with it, because you don't want to be surprised with the bill. And that leads me to my next point of being a doctor being in network versus out of network. So an in-network doctor or hospital facility is a provider that does accept your insurance plan. They have a contract with the insurance plan, so they accept it. Out of network doctor is either a doctor that doesn't accept the plan that you're on, or they don't accept the insurance company as a whole. If they don't accept the insurance company as a whole, it's not even, I mean, you're stuck with the bill all by yourself. Now, when it comes to PPO plans, it has out-of-network coverage. That means that you can see a doctor that doesn't accept your plan, and that will go towards your out-of-network benefits. And your out-of-network benefits are usually higher. So let's say if you go see an in-network specialist and you have a $55 copay. Then if you go see an out-of-network specialist, it may be subject to your deductible. They may or may not accept the contracted amount. Go to a doctor that doesn't accept the insurance plan, right? They can, some of them, again, it depends on your insurance company, can balance bill you. So that means that they don't have to accept the contracted amount that the insurance company said. That means, for example, going back to the $1,000 claim, if the hospital or if the doctor sent a bill for $1,000 and your insurance company says, well, we only allow $500 for this service, and the doctor can say, well, that's cool, but we're going to bill the patient for the remaining $500. So you still have to pay the $1,000. So that's something to think about, again, when you're choosing your plan and thinking about claims. That's why it's always good to make sure that a doctor or provider is in network versus out of network. Some people don't mind going to an out of network doctor, because even though they may have a cheaper plan, that's the doctor that they've always went to, and they trust that doctor, so they don't mind paying more. Before you go to the doctor, let's say that you don't know your copay amount. Usually insurance companies have portals or online websites that you can look up your plan and see what your copay is, see what you would be responsible for before you go to the doctor, because you don't want to rely on the doctor's office telling you what you owe. You should already know it, because, and I'm not saying that they may do this, but you don't know if they're telling you the right amount. So you want to make sure that you already know what you're responsible for. So that way, if you go to the doctor's office and they tell you a different amount, you can catch it before you actually pay. Like, well, why is this different? Because maybe they don't have your updated insurance. Insurance companies do have benefit booklets or a summary of benefits and coverage that you can get. You're supposed to get it right when you sign up for your insurance. And it breaks down your benefits. How much you have to pay when you see your primary care doctor, how much you have to pay when you see a specialist, how much you have to pay when you go to the hospital, if you get an MRI, for your medications. If you don't have that, definitely call your insurance company and ask them for it. Another thing is, most insurance companies, your annual wellness visits are covered at 100%, meaning that you don't pay anything. And that includes gynecological visits for us women. We don't have to pay for our annual wellness visits for either a primary care doctor or a gynecologist. So again, that is something you have to check with your insurance company about, because it may vary from company to company, but it usually is supposed to be covered. The last point is, medical expenses are expensive. We know that, like, they are expensive. I know that firsthand, just working at an insurance company, working for a doctor's office. It is expensive. But if there is a flexible spending account and a health savings account that you may qualify for, and that is something that you want to check when you sign up for your insurance. I know that most companies offer that to their employees as part of their plan. It's important to know the difference though. So with the flexible spending account, there are a lot more restrictions. You contribute a certain amount out of your paycheck each month, and each pay period, and your employer contributes an amount. Now you get this amount up front with the flexible spending account. So let's say you want to do $250 for the entire year, and they're going to break that down, I don't know, maybe it's like a dollar or something every 2 weeks, right? But you get it all up front. So it's right then and there. So that means that you can pay for your copay with that, your co-insurance, deductible, you can get Band-Aids, you can get glasses, wipes, anything healthcare related, medical related. You can pay for your prescriptions with it. You can do that with the FSA card. Now, you have to check the site to see what counts as a qualified medical expense, because they change every year. So you want to make sure that when you go, before you even go to the store and try to buy it, that it still counts. Now, with the health savings account, you contribute an amount, but you don't get it all at once. So let's say you want to put $250 on there. Well, it's only going to give the amount that you contributed every 2 weeks. So if it's only going to put $1 on there at a time until it builds up, you don't get it all up front. Now, if your employer contributes, then you do get that part up front, but the rest you don't, because it's a savings account. So think of it as your savings account and your bank account. It goes there as much as you put it there. So if you only set $2 every paycheck, then you're only going to see the $2 every paycheck. With the flexible spending account, it doesn't roll over at the end of the year. That means you have to use it all before the new year. Before January 1st, you have to use everything on that card. With the health savings account, it rolls over until you close it. So if you started, so let's say there's like $500 on your card now. If you don't spend that $500, you can use it again next year, and it still builds up based off of what you put it. So again, it depends on you and your family, what's best for you guys. Usually if you have kids, the HSA card will be a lot better for you because it just rolls over, or you might use it all. If you're by yourself or you don't have kids, maybe the FSA would be better for you. It just depends. But my goal for today was just to make sure that you guys could understand a little bit more about the insurance that you have, because I know that it's confusing. Trust me. But I just want to make sure that you guys could understand a little bit more. So I just wanted to break it down to what certain terms mean, and I really hope that I was able to help someone. So you can always check us out at www.healthformative.com. Feel free to ask questions, leave comments, anything that you feel like I forgot or you want to know down below, and subscribe. Thanks for watching. I really hope that I was able to help someone tonight, and stay tuned for our next videos.